Hi guys, welcome to my trades. Today we're gonna do a trade recap on how I lost $100 a day in the markets. So first of all, my bias today was bearish. I hold that bias a bit too strong because of I thought weekly opening gap, this gigantic value gap, was gonna work more into our favor, but market said nah, wanting to reach this higher liquidity and imbalances. So I took a trade on NASDAQ, smoking on the gas pack. Um, and basically I marked out these 10 a.m. Where is it? Okay. I marked out these highs, buy, buy, and then I marked out these lows. And I can even see my mistake on what I did wrong today. But give me a minute. Yeah, that's basically what I marked. Then I went down to a 5 minute, 10 a.m. Market opens. I waited for news at 10. Saw this imbalance reaching, saw 5 minute retracement, went down to 1 minute. Should have marked that out. Wait, give me a second. Get out. Okay. Saw 5 minute retracement, said, hey, imbalance, that's a break of structure. Perfect. Oh, here we go up again. This is my mistake. This is when I should have said I'm switching my bias. Um, said perfect. Okay, another 5 minute and a 5 minute retracement set perfectly. Then saw break of structure via inverse, kept going on, yada yada yada. Again, too much time has passed since the liquidity has been swept, stuck to my bias way too long, and entered here for I think it was here. Yeah, because I got dicked today. And enter here for a short base off equilibrium. Note for the day. Liquidity always reacts quick. I shouldn't have waited that much time for liquidity sweep. Waited 20, 30 minutes, and around the entry was here. This is the one that I actually lost at 500, but this is me looking down. What I would have fell for here. Wiggle structure via inverse. We tapped in with this candle. Enter on continuation candle. Uh, this above highs. No, wait, give me a minute. Is above. There we go. This is above the highs. Enter on the continuation, and I got fucked. Genuinely got fucked. Lost $100 today, which is fine. The thing that I just got mad about is that I did horrible risk management. I over leverage. Wait a bit. What the heck is my trade? Oh, oh, here we go. Here it is. My mistake. I did it on the third candle. This trade should have happened in between 10 to 10:12 maximum, but and I waited too much. This is already 10:18. Two candles already passed by. I was too slow. And I should have said this is not reacting as fast. I can switch my bias and gone for a long or something. Or basically said no trade. Now, the trade that I would have taken, now that I'm back testing this, let's go through the S&P. It's Oh, by the way, and the mistake I did is that in the hourly, I did not mark this low. And if we mark that low, we 20 fucking blues, give me a minute. And if we mark that low, we can see that if you go to the 5 minute, market opens, it sweeps out the low, we then break structure in the 5 minute, then we can go down to the 1, 9:30, 10:10, and just enter because it's not going down, it's not going up, and it's going to seek higher liquidity. So, and if we're doing the 1950 rule, market first liquidity have been swept, so my buy should have been long for value gap over here. Bing, bang, bops, bops, boom. Take profit 1 with a 1.89, and could have left more up top for a 3 RR. That was a trade. That was my mistake. I didn't mark out that low. Can write it now in my journal. Um, so let's go to ES. ES had a better trade that I did not see. So the trade that I should have taken today was, mark out 10 o'clock. And as we can see, we see the low that we should have marked. We see this low. That's too low. Oh, my laundry's done. And we can put take profits up to these highs. Then we go back to the 5 minute. See this, we see that. 9:30. We see that market open liquidity has been swept. 5 minute retracement. Ay, how did I not see this? 1 minute. Oh, and now enter off equilibrium. Right here. Now we could have made a banging 8.71 RR. That $100 that I lost could have been 800. So, note of the story, even I that been trading for a year and a half still freaking fails at liquidity. I still fail at liquidity for some just practice, to be honest. So, for next time, I will count this as a low and not glance over it and take order flow um more to my advantage, because if we swept this and we see that we went up with a 5 minute break of structure, and then we have a retracement, and in the freaking retracement we go down, we can say, oh my god, no, we have a equilibrium, but it invalidated the freaking it invalidated the fair value gap. No, bro, just equilibrium. We broke structure in the 5 minute. We don't need to worry about a 1 minute break of structure. So the only thing we need is a continuation candle up, stop loss in the downside, and then just put it for the next hourly high, which is obviously gonna take because we took liquidity in the downside. But and even if you wanted to wait for news at 10, you could have went news at 10 here. Nah, you would have been fucked, to be honest. You would have been eh, would you? Let me see. You could have entered up here, equilibrium. Yeah, here, equilibrium the downside. Enter right around here, stop loss here. And you still would have gotten a 2.85 RR. So, lesson of the day, don't be too stuck to your bias. Be flexible, take market conditions as it is. Pre-market bias, and the 30 minutes you have for new bias, it's valuable information. Keep in mind the little lows, it does count and it does react. And yeah, that was my mistake, and that's how I lost $100 a day trading. But we learned and how to improve. We made mistakes so that we don't make them again. And yeah, have a good day. That was my trade.